Hey everyone, this is Sean from the Saving Your Future podcast. In this week's episode, we're going to talk about alternatives and ways to save for retirement. Thanks so much for listening to our podcast and definitely consider subscribing. On this podcast, we talk about personal finance in areas such as saving for a home, saving for a rainy day fund, everything up to and including saving for retirement. This podcast is based on the book Saving Your Future by Moran. And today, as I said, we're going to talk about different ways of saving for retirement. So let's get into the topic. As we all know, the most common ways or the first thing that someone would say when you say saving for retirement, they would think of a 401k or an IRA. And, there's other methods as well. There's other forms of retirement plans and savings. The benefits of those is the tax deferral generally. There's also the Roth IRA, which promises savings in the future. So if you're interested in hearing about the Roth IRA and my thoughts on that, take a look for the podcast episode on that. But outside of saving for retirement in 401ks, obviously there's a maximum amount you can save. And most people aren't maxing it out. So if you're not, I still recommend that the best way to do it is to save and fully maximize the tax deferral in a 401k or IRA, depending on whether a 401k is available to you. Another option is annuities. I personally don't like annuities because they're really insurance. You're going to hear a lot about those, and I'll probably do a podcast episode on annuities. But generally speaking, it's insurance and kind of like a savings account with insurance. So I'm not a big fan of those. Another thing to consider in your retirement assets is your home. Do you plan on living in the home that you live in until the day you die? Or if you're younger and you have children and you have a bigger house, would you consider downsizing or moving? What's your plan when you retire? Because if your plan is that you're going to downsize your home, let's say you live in a $500,000 home and you'll downsize to something small that's $250,000. That's using today's dollars. Still, once that's all paid off, you'll have $500,000 worth of cash. And if you downsize, you'll pull out $250,000. Now, there might be some capital gains associated with that, but you'll still have additional cash to use for retirement. So that's another way to potentially save. Another thing people will do is actually invest in additional real estate. So maybe you're at a point where you can save some money and maybe your mortgage is good enough at a certain level that you have enough disposable income to essentially buy a rental property or buy an investment property. Maybe just buy land that you might build on when you do retire. That particular property can be a value to you when you retire. Make sure, again, like any other investment, that you would in fact want to move to that area, or that the value in your estimation will go up over time and you can eventually sell that property. So for example, I live right now in Northern Virginia, and areas west of me in Western Loudoun County are starting to grow and grow and grow. So you might say, well, hey, I think I might be too late or on the tail end of it. Or you might say, well, let me go a little bit further west and maybe I'll buy some property there because I'm sure the value is going to go up in a number of years. So as an area is growing, you might use that as either whether long-term or short-term buying into real estate. That can definitely be an option and a way to build your portfolio to allow yourself to have a nice nest egg for retirement. Obviously, once you maximize your 401k and you purchase real estate and that kind of thing, maybe rental property as well. You can take the real estate that you purchase, rent it out for the time being, and use that money to pay off the mortgage and or build future equity, make some of the income coming from that property be money that you can use toward another property potentially. So by using real estate as both an investment for the future as well as income currently, you could use that income to secure a future for yourself as well. And once you've done those things, you might say, well, hey, I also want to invest in stocks outside of a retirement account. Now, I recommend that you maximize your 401k first, get the money in there that you need, and only after you've fully taken advantage of tax deferral should you then invest in the stock market outside of that. That's my opinion. That's what I think makes the most sense. Now, if you need those funds to be liquid, then of course you're going to want to invest in stocks and bonds and maybe money markets and things like that. And again, I said liquid, but sometimes stocks may not be fully liquid because if the market goes down a little bit, you might not want to get out of that position right away. Then another thing that people do often is they build a business or they invest in businesses. And by doing that, you can potentially put yourself in a situation where you have something else that you can sell or something else that you can pass on when you get to retirement age. So maybe it's a business is something you can pass on to your children if it's growing. Maybe it's something that you'll say, hey, I'll get in on the ground floor of something that's going to go very well, and then I can turn that into a nice, significant profit down the line. So that's another way that you can potentially retire and save for retirement and produce a nice income for yourself. Within that, the exit strategy of that business investment can be that, hey, I'm going to sell this business to you, but you're going to manage it when in my retirement, and I will get a certain percentage of the income. So it can produce future income even when you're done with the business. It might just be a straight out, I'm going to sell the business to somebody when I'm done. And it might be that I'll sell a percentage of it, sell a management interest in the property, and return a certain interest for yourself so that you have a significant return in retirement as well. So there are a few possible options of how to save for retirement. As always, I say the first and foremost is to maximize your tax deferred assets in your 401k, IRA, 403b, whatever it might be that's available to you. IRA, if you don't have those available to you, then look at some other avenues. Like I said, investing in real estate, investing in gold, investing in other assets that will increase in value. Now, don't go for the latest fad. I remember in the 80s, it was baseball cards and stamps. And then in the 90s, you had Beanie Babies and things like that. Don't go for something that's value might be something now, but it'll go away. One thing people might be thinking of is cryptocurrency. Definitely listen to my podcast episode about cryptocurrency and why I definitely don't recommend it. Now, for the right people, maybe it makes sense, but for many, I think it's probably a bad move and a bad idea. So real estate, businesses, investing in hard assets, those type of things can definitely set you up nicely for retirement. I hope this was helpful. Definitely subscribe. We generally put out one episode a week. I'm also having conversations with various financial professionals to bring further information to you. My most recent podcast episode before this was with a gentleman who told us a little bit about stock options. Before that, it was with a gentleman, Fraser Rice, who talked about how to invest and prepare yourself like the 1% might. And, we're going to continue to do that. So if you're a financial professional and you'd like to connect with me, would love to connect with you. In the show notes, I will put my email address as well as ways to connect with me. Definitely share these podcasts with others, and I greatly appreciate it. Thanks so much, and we'll catch you in the next episode.